Growth stocks versus value stocks. Which should you buy? Most Americans are picking the wrong stocks and leaving thousands on the table. Here's why, and which strategy actually wins for your portfolio. I'm going to show you exactly how to tell the difference between growth and value stocks. Why most people get this wrong. And the one move that could add $50,000 to your retirement by the time you're 50. Let's start with what these actually are. Because the names trick people. A growth stock is a company betting everything on tomorrow. Think Tesla, Nvidia, or Amazon. These companies are reinvesting profits back into the business instead of paying you dividends. The pitch? Your investment grows because the company grows. The stock price goes up because investors believe earnings will explode 5 or 10 years from now. Value stocks are the opposite. These are companies like Coca-Cola, Johnson & Johnson, or Berkshire Hathaway. They're mature, they're established, they print cash consistently and they share it with shareholders through dividends. You make money two ways. The stock price slowly climbs, and you collect checks along the way. Here's the critical difference nobody talks about. Growth stocks are volatile, crazy volatile. Nvidia has had 40% drops. Tesla has swung 80% in a single year. Your heart can't handle that if you check your portfolio daily. But here's the flip side. When growth stocks work, they work hard. If you'd invested $10,000 in Nvidia in 2015, you'd have over $2 million today. Value stocks? More boring. Johnson & Johnson went from $90 to $160 over a decade. Steady, predictable, but also no life-changing gains. So which should you actually buy? Here's my honest answer. Both. But you need to understand why and when. Part 1. The beginner move. If you're just starting and you've got money in a Roth IRA or a 401k, and you should have both, your best bet is an S&P 500 index fund. Not picking individual stocks at all. The S&P 500 is roughly 70% growth stocks and 30% value stocks already. You're getting automatic diversification. Robinhood and Fidelity both let you buy SPY or VOO for practically nothing in fees. This is the move that works for 95% of people. If you're contributing just $300 a month into an S&P 500 fund from age 25 to age 65, you're looking at almost $1.4 million. That's not a guess. That's historical average returns. That's the power of time and compound interest. But some of you want more. I get it. Part 2. If you're picking individual stocks. Growth stocks make sense if you have a longer time horizon and a stronger stomach. You're under 35? You've got 30 years until retirement? Growth stocks can absolutely be part of your strategy. The volatility matters less because you're not touching the money for decades anyway. But here's what kills most people. They buy one hot growth stock. It tanks 30%, and they panic sell at the exact wrong time. They lock in the loss. Don't do that. If you're buying growth stocks, you need a plan. Maybe it's 5% of your portfolio. Maybe you're dollar cost averaging. Investing the same amount every month regardless of price. That smooths out the crazy swings. Value stocks matter more as you get closer to retirement. 40 years old? Moving toward 45? You want stability now. You want Coca-Cola and Johnson & Johnson sending you dividend checks. The last thing you want is a tech stock crashing and wiping out retirement savings right before you need it. Part 3. The hybrid play that actually works. Here's what I recommend. Start with the S&P 500 in your Roth IRA and 401k. That's your foundation. That's your $1 million by 65. Then, if you want to play with individual stocks, keep it to 5 to 10% of your total portfolio. That's your fun money. Buy a couple of growth stocks if you believe in them. Add some value stocks for stability. But most of your money? Index funds. The math is brutal but honest. Even professional fund managers don't beat the S&P 500 long term. You're not going to either. But you might beat inflation, build wealth, and actually reach financial independence if you stay disciplined. Growth stocks will make you feel like a genius or an idiot. Value stocks will bore you to wealth. The real secret? It's not whether you pick growth or value. It's starting now, staying consistent, and not selling when things get scary. That's it. If this made sense to you, subscribe to this channel. We break down money moves every week that actually work. What's your biggest investing question? Drop it in the comments. I read every single one. Let's go make you rich. Word count 847.